Hello, Kurt Jackson here with this week's installment of Your Money Matters. We're going to try to cover three different topics today. Hopefully they'll be quick. First of all, I want to talk about what's the biggest expense for seniors, for retirees. And whenever I ask someone what that biggest expense is that seniors are going to face in retirement, they all say without question that it's healthcare costs. You know, I can ask prospects, clients, even advisors, and they'll all answer healthcare costs almost 100% of the time. They're all wrong, however. The biggest expenses seniors face in retirement is the cost of housing. In fact, in a recent study completed by the Employee Research Institute, housing accounts for 40 to 45% of seniors' budgets. All right, that kind of goes against the thinking that we pay our house off before retirement, because that's not happening as much as it used to. The study also shares that healthcare costs do follow closely behind. And essentially, 75 to 80% of retirees' income ends up going to housing and healthcare. It doesn't allow for much additional spending. And this is going to be a big problem, an increasing problem in our country, because there's currently 100 million people over the age of 50. By the year 2030, there's going to be 135 million people over the age of 50. So two important things that you need to know. First, the more seniors there are, the less likely the programs, the government programs they have, are going to be able to keep their full promise. Social Security, Medicare, all of those types of things. And I think you're going to see the cost of living increases in those things going by the wayside of the future. They might even have means testing, meaning, you know, depending on what your income is, you may have to pay more. And they kind of already, well, they already do that with Medicare. That may come with, it may become more prevalent. It's also starting to be considered that all those under age 50 and paying into Social Security will never get back what they've paid in. So here's an important question. All right, is Social Security a benefit or a tax? All right, so here's where I want you to think about, or what I want you to think about is this. What this means is that we're going to be transferring wealth from those that have it to those that don't. And if you recall, we've talked about before that 75% of retirees end up in retirement or at death with less than $25,000. So this endeavor is going to begin sooner rather than later. And so if you have money, okay, shouldn't we be asking you who pays taxes? Do you want to proceed, you know, in the future? How do you want to handle all of this? Right? So are you working to take care of your family, or are you comfortable giving a majority of what you've earned and what you've saved to someone other than your family? Because that's what looks like, that's what's happening and is going to continue to happen more and more so. So I don't want you to get me wrong. I think we should all contribute. But I guess the discussion that we need to have is, what's your fair share? Okay. Ultimately, would you like to have input into that number of how much they're going to take from you? Okay. Or would you prefer to leave that determination up to Washington? Right. I hope that's a no-brainer for you. So if those are something that you want to look into, maybe want to work with, those are things that we specialize in here. We look at different ways of getting your money where it's not under the control of the government, so you're able to keep more of yours, control it, have more certainty, have more peace of mind. Okay, now next topic I want to talk about is, it kind of comes under the guise of, will we repeat the same mistakes we made before? Okay, so see, current rules changed since the real estate bust we had in 2008, and it makes it very difficult to get a home loan. Okay, probably too difficult. Now remember, I spent 20 years, almost 20 years in the mortgage industry, so I have a unique perspective on this. But the Federal Housing Finance Agency has announced new regulations for buying homes with little or no money down. I don't necessarily have a problem with that, depending on how they do it. Okay, the announcement provides support to make for the banks to make the loans, and what's going to happen is now the government's going to guarantee these loans. They've already been doing some of that, quite a bit of that with FHA, but now they're trying to do that through Fannie Mae and Freddie Mac. So the banks aren't going to have to despair about the quality of the loans that they make, because it's going to be guaranteed by the government, which really is by you and me, the taxpayers. Okay, so even if it defaults, they're not going to be held liable. Isn't that kind of what got us into trouble that culminated in late 2007 and through early 2009? So instead of reducing Fannie and Freddie's impact enroll in American Housing. They want to expand those entities that these are entities that back 60% of all mortgages in the private market, and they're going to want to guarantee 90% of new mortgages. So isn't it quite obvious that the government's going back to the same failed practices to try and spur growth in the housing sector? Because I know it's an important part of our sector, but it's not going to work. See, the people that they're trying to get to buy these houses can't afford them. And as I said, I don't mind low down payments for the right people, for the right reasons, but we have to change how we view housing. You can't buy and sell quickly with little money down. You need to, find a house that you're going to be able to afford, mainly, without, and still be able to save for retirement and do all those things and not live above your means. That's one of the big problems we've been getting into. So we need to be able to focus on saving, and if we have too much cost in our housing, then it makes it harder for us to save. And for some reason, we've come to this conclusion that we can somehow consume all of our equity that we have in a home in retirement, and that's very difficult to do, and it's not very efficient. It's certainly not the most efficient use of your money. So you got to keep in mind the richest generation came from the Depression generation. Okay, they were great savers. So keep this in mind, that the things that we do and the way we help people, we can really help you jet propel savings. We've got the best savings vehicles ever conceived, and we can use those together with a strong, solid plan to buy a home, even if it is with little or no money down. You just have to have a long-term housing strategy in order to be able to really justify doing that. And you need to look at the costs. Is it cost me less to buy with little money down than it does to rent? Okay, but you're also going to make that decision that you're going to stay there for a long period of time. And by a long period of time, I know this isn't really what real estate agents would want you to believe, but you're talking 10, 15, 20 years staying in a house, not 5, 7, and then moving up. All right, so just a different way of looking at things. Okay, now the last one I want to talk about, and this is one thing that really concerns me, because so many of you have money in the stock market, and we've been hearing about how great it's been doing, and it's done great since 2009. Don't get me wrong on that. But have you ever thought about why it's really going up? Well, according to Weiss Research, in a recent article, household wealth has increased by $13.6 trillion since 2007. Okay, the Federal Reserve printing presses are responsible for $11.5 trillion of this growth. So in other words, most of the gains in our portfolio, in our wealth, is funny money. It's artificial, and it could end and go away as easily as it came. Now, adding to this incredible stock market phenomenon, our companies are using stock buyback programs, okay? Instead of spending money on research and development, instead of creating better and more efficient companies, instead of creating more jobs, they're increasing their stock share price by buying back their own shares, and thereby reducing the amount of shares in the market, effectively increasing the price. Okay. Now, some believe that these share buybacks are being done when prices are already high, stock prices are already high, driving them even higher. Companies like IBM are being accused of using their stock buyback programs to hide problems with a company's operating expenses or earnings or sales. See, in 2007, stock buybacks were a precursor to the stock market crash, and we're seeing it again at a much higher level. So I want you to have this information so you understand why I keep talking about these things. And I keep asking my clients, if we're at the end of the second longest bull run in bull market in history, should you be taking an inordinate amount of risk, or should you be getting a strategy that will keep you safe and protect what you've earned? Okay, those are some important things to think about. Nobody likes to lose money. So if you're at a point where you'd like to see about different ways that you can protect your money, there are ways out there. There are ways that you probably haven't heard of unless you've been listening to the stuff that I talk about, that I write, my videos, and all of those things. But there are some phenomenal vehicles out there to help you do that and still help you grab some of the gain that's out there. For instance, if you had your money in a vehicle and the market was up, when the market was up, it would grab up to a 10% gain, but it would never lose if the market was down. So if the market was up 20%, you got 10% of it, would you be happy with that? Would you be okay with that if you knew that when the market went down 40% or 50% like it did between 2007 and 2009, would you be okay with the fact that you didn't lose any money? So those are some things to think about today. I hope you enjoy this. If you do, please share the link with your friends, your family, anybody you care about. I'm trying to help people kind of get a better picture of really what's going on in the world so they're better able to protect themselves. That's what we're about here, is protecting ourselves, having the most efficient use of our money. And really, ultimately, what we're talking about here, for our end goal is to help you get the most retirement income that you can from the least amount of money. Make sure that it's guaranteed lifetime income, to make sure that it's also guaranteed to rise. Maybe, we can't necessarily guarantee it's going to keep up with inflation. We're hoping it's going to exceed inflation, but we don't know what inflation is going to be. But at least you've got a fighting chance. We also try to help people make sure they've got enough money to pay for health care, for long-term care if they need it, in the most efficient manner possible. So we want to give you that more certainty, more control. The vehicles we use, people will tell you that you lose liquidity, but if you have guaranteed income for life, we feel like it gives you more liquidity, and you can save other money on the side too for those major things that might pop up. So just hope you enjoyed this week's installment. Enjoy your feedback. If you want to give me a holler, my information's up there on the screen. Be happy to talk to you about any of these things, explore these types of things with you. We do look at things differently, but we've got a great argument on why we look at things differently. So thanks for tuning in. I hope you have a great week. We'll talk to you next week.